Hello, everyone. Welcome to the live stream. I'm starting a little bit early because I'm out of town. I'm actually in Johannesburg at Sandton City, near the richest. We're in the richest square mile of Africa and opposite the Johannesburg Stock Exchange. So pretty cool. And I'm in a hotel. So bear with me if things are a little bit weird. I thought the internet was a bit slow, but it's not. It looks pretty good. So I think we've got a go here. And so welcome to everyone. Welcome to the stream. It's fantastic to have you here. It's Sunday night. It's really the last weekend of this sort of season, this year, the last day before 2026 starts in earnest. And so there's going to be all sorts of attention on what the news was last week, what led up into Christmas, and what might lie ahead in the next few weeks to set the tone for the next few months. So we'll look at a few of those things, and I've got just a few notes here that we can go through very briefly before we start. I've started a wee bit early, as I said, because I want to just check everything's working good. So if it is good, just please type up in the chat and let me know that you can hear me well and that everything's good. Hi, Marcin. Okay, fantastic. Wonderful. Is the sound adequate, even though I'm using the microphone from my speakers, from these things, because I didn't bring my desk mic? Is it sounding okay and clear? Okay, fantastic. Thanks, TC and Marcin. All right. Modern technology is wonderful, isn't it? There are 12 microphones in these headphones and directed to the area in front of my mouth, and somehow picks up the sound pretty well and cancels out the surrounding sound too. So pretty good. Good for traveling and good for everything else. So good for everything else. What a silly thing to say. So anyway, welcome everyone. And we are back to normal on Monday. Live trading has we haven't stopped trading. We've been trading throughout this break. We've taken quite a number of trades on gold and silver. As you know, they moved up during the holiday season. And so we were just fortunate to be working and trading. And we managed to get hold of the longs on silver and some of the other things, cryptos that we've been trading. So sometimes when you take a break, the markets move. Not often, but sometimes they do. So there we go. So let me just say hello to everyone. And as we prepare, hello, Marcin. Thank you for your attendance. I really appreciate it. TC as well, of course. Always good to see you, TC, and Daniel. Fantastic. Thanks for the sound check. Thank you at the Boy Jones. At the Boy Jones 1. Hello, I'm Car. How's it going, mate? Always good to see you. Hello, Emily Trading. She says, hello, James and chat crew. Happy New Year. Yeah, Happy New Year, everyone. It's actually the 4th of January, so we're a little bit late, but it is the new year. So Happy New Year to everyone. And I hope it's a wonderful and prosperous one for all of you. Happy New Year to you, Ole. And Hayden Benstead. Hi, nice to see you. And it's my birthday in 2 days' time. So send the presents. I'll post the address up at the end of this stream and send your birthday presents to me. And if you can guess, type it up in the chat right now if you want to. Guess how, you might know how old I am, but type up in the chat how old you think I am. And if you get it right, I'll send you a free membership to this YouTube channel. So, but only if you don't know it. All right, so we start in 3 minutes, folks. The reason I'm just waffling on is because we haven't actually started yet. We're starting on time as usual. I've been in the car the whole day today. I drove all the way from, sort of mid South Africa up to the top of South Africa in Johannesburg, where I am now. And I drove for about 7 hours yesterday and about 5 or 6 hours today. So it's a pretty long journey, 12-hour trip. But we're here now and here safely. Excuse me. Hello, everyone. Emil, happy birthday. Thank you, Barbara. Appreciate it. Thank you so much. 19, possibly, TC. Is your birthday on the 1st, Hayden? Wow, that's fantastic. Happy birthday to you and Happy New Year. Awesome. So if you can guess how old I am, put it up in the chat if you don't know. And my birthday is in 2 days' time. And if you get it right, I will send you a free membership to this YouTube channel. All right, so let me just get my notes sorted out here. We'll start in about a minute's time. So folks, settle in, grab a coffee, get comfortable, get ready for the stream. And 57, pretty accurate. The Boy Jones, pretty close. Not bad. So I look a little bit ancient. Fair enough. Fair enough. All right. Let me clear my throat, have a sip of Coke Zero, and I'll get straight into the notes. You're about 3 years off the Boy Jones, and GSCH, you're about 10 years off. I'm turning 60. No one wins the free membership. I'm turning 60 on today is Sunday. Monday, on Tuesday, I'll be 60 years old. That means I'll have been on this planet for 6 decades. It's a very long time, incredibly long time. I'm surprised any of us make it this far. I'm surprised we don't burn out and get mental illness long before we get to this age, or fail physically. Many of us do, of course, but those that get through is always a bit of a miracle. 62. Thank you. 62, but look younger. 62 in my wisdom and age and everything else. All right, folks, let's get into it. It's time, and I'm going to go straight into the notes. Please type up your questions as you wish, as we go along. And if you've got anything specific, I'm going to spend just a couple of minutes on these notes just to set the scene, and we'll go straight into the charts. And I'll try and finish this up as quickly as possible today, seeing as it's my birthday. And I'm also visiting my grandchildren here in Johannesburg. I have 2 grandchildren, and one of them I have not yet met. So it's going to be super exciting. Let's get into it. This is the live stream market briefing on stocks, bonds, crypto, commodities, and FX today on the 4th of January, 2026. So the big picture is that the market regime and risk appetite is kind of still, we talked about this last week, this sort of 2 steps up, 1 step down, minor corrections and sort of minor rallies, advances. But it's been that sort of period of the year when we don't expect violent and massive moves. We did see it on gold and silver, but not so much on stocks. So we're still steadily stair-stepping up, and pullbacks remain corrective and not impulsive. So risk appetite, these are my thoughts, and of course, take everything with a pinch of salt, is alive. There's still a risk appetite for risk, but selective, and money is rotating and not exiting. Now we saw a very interesting thing. We'll look at the charts when we come to them. On the last couple of days, ahead of the weekend, on Friday, we saw silver, gold, stocks, bonds, and a few other things selling off quite dramatically towards the end of the day. And at the same time, dramatically, but they recovered somewhat. And there were some jitters in the market for sure. And of course, we've had the Venezuela snatch of President Maduro over the weekend, which will affect oil. But we're seeing this sort of stepping up, and apart from this move in metals that we saw, and stocks actually all collapsing a little bit on Friday, but at the same time, the one thing that has lagged everything else for most of the rest of this year, most of last year rather, 2025, was crypto and Bitcoin. We saw Bitcoin dominance fall off a cliff on Friday, and we saw Bitcoin and the altcoins gaining ground, whereas everything else lost ground. Bit of a rotation, I think. I'm assuming, I don't know, but perhaps a little bit of rotation out of other stuff into crypto, as crypto has been the laggard and has not yet caught up with the rest of the market. So maybe that's about to happen in 2026. Let's write off 2025 for crypto. I think we may have been down by a couple of percent overall for 2025, or maybe up by a couple of percent. I'm not sure, but it wasn't pretty. Right, so key observations, despite ugly economic data last week, and of course we got the data dump. This is when all the news came out, the catch up from after the shutdown, when we didn't get any data for a long time, about 2.5 months. And that started to trickle through, and on Friday we got a whole bunch of it. And despite somewhat ugly data, we have to admit it wasn't great. The markets didn't break structure, although they collapsed a bit on Friday. That data tells us, or that move tells that positioning had already adjusted. I'm just going to read through very quickly. Economic data, we saw jobs dropping off, and there's the idea that jobs will be very, very frail and weak moving into 2026 this year. The rest of this year could well be a situation where job numbers continue to get worse and worse and worse month after month. Maybe not by dramatic amounts, but steadily and slowly chipping away at the unemployment number, or raising it basically. And this will be very important to watch and to notice as we go forward in 2026. And of course, a softer labor market. If anything spooks the Fed, that's what it is. Materially weaker job numbers, and we saw some other growth indicators drop off as well. But the markets kind of shrugged it all off. We'll have a look at the charts very quickly, very shortly. But on Friday, we saw a bit of a drop, bit of a rally on the previous rest of the week, and then a slight recovery. But I think it was rotation into things like Bitcoin, Ethereum, Solana, XRP. The data had confirmed a slow down narrative that was already in place, so perhaps it was already priced in. So pricing in. If weak data can't push the market slower, sellers are already done. That's my quote. It's not anyone else's quote. So what's coming up next week, or this week rather? Well, starting tomorrow or tonight. Labor data, we need to follow up on that, see what's going on. We'll watch the jobs numbers on Thursday every week. Inflation updates, and of course the Fed speakers. I don't know what the calendar is for next week for Fed speakers, but we will be watching to see what they've got to say, particularly about jobs and inflation. Inflation seems to be ticking down, but I don't think that's going to last for too long. And I think we're going to see inflation ticking up next year and jobs ticking down, and that's going to force the Fed to cut further, which could be, if there's no panic, good for the markets. So S&P is still holding high-low structure. Pullbacks are still relatively shallow. Friday was a bit scary. We'll have a look closely now. My bias is to buy dips, but don't chase the highs. So let's buy the dips and get out on the rallies and buy the new dips. So it's going to be a wave zigzag formation rather than straight up or straight down, I think. And then sector rotation. We talked about this last week too, rotating into financials and healthcare, and they've done pretty well this week, as you'll have noticed. And then selected industrials, and I dare to add to that perhaps cryptos. But I've got there's a bit of a warning on cryptos that I'll talk about shortly. Digesting but not breaking down, mega cap, AI, etc. Yeah, bit of a bubble, everyone's saying, but they're not showing bubble-like behavior just yet. And then real estate lagging, of course. An interest rate play to some degree as well, and highly leveraged yield plays are also struggling. Some names, we will talk about names later, bonds and rates, and I will post this up in the members group later on. I'll put up the PDF there so you can read through this at your own leisure. Bonds are confirming the equity tape. That's good. The supports risk assets, but caps at how aggressive risk can get, etc., etc. Rates are saying slow down, but not shut down. Commodities, we'll talk about gold and silver and how they've traded and pulling back quite sharply on Friday, and copper being a little bit choppy and erratic. Dr. Copper we'll talk about, and I think we've got to go to the charts for all of this. Of course, we've got to talk about natural gas and oil and Venezuela, and what's going on there and what's likely to happen to the price of oil given pretty unpleasant circumstances, snatching presidents, illegitimate or not, from rogue countries. You may agree with that sort of strategy or not. I'm sort of undecided myself. I think it sets a bad precedent. But when it comes to the oil price, I think it's probably positive for the oil price, but there may be a knee-jerk reaction to begin with. And I got this advice from my wife, by the way, who's my new financial advisor, who's not a trader, who's a sociologist, and a very good one. And she advised me that the price of oil, I'm joking around with you a little bit, but she advised me the price of oil was likely to rise on the news of this weekend with Maduro being snatched out of Venezuela and the chaos that may ensue there. But in the long term, she said the price of oil may actually reduce or benefit from it, as Venezuela only produces about 15%, I think, or maybe it's 20% now, of its total oil capacity. That means there's potential for a lot more oil to come into the market. Potential, not necessarily going to be realized, but it's there. And that could be something in the mind of oil traders. But I think there might be short-term risk. There might be short-term disruption to supply from Venezuela. But I think in the longer term, it might be better. And therefore, I think we should be selling the rallies on oil. We'll look at the charts when we get there. And perhaps buying the dips. I think the dips are not going to be there. I think we may have gapped over the weekend. And then crypto, we'll talk about crypto in a minute. But my main story here is that crypto did pretty well over on Friday and on the weekend. And with that, I'm going to switch away from here and go to the charts. And we'll get back into the charts now. I'm going to do a bit of fast switching here, so bear with me. Stop screen. Let me get my charts up. Window, charts, there we go. All right, this clunky old system of StreamYard. All right, folks, now let's get into the charts. I hope everyone's hearing me well. Let me just quickly just check back to, okay, the age guesses the big 50. No, it's the big 60. You were 62, Dave, pretty accurate, mate. 59, okay, so I look my age, basically. All right, fair. I thought I looked a bit younger than my age. Anyway, everyone's following along pretty well. Good day, Dunwat. Nice to see you. And thank you very much. I appreciate that. I appreciate your comment there very much. I do. And Vishesh, the gas giant, back on the desk after a long break. The longest break you took in 2025, big targets for January. Start looking at oil. Fantastic. Come and join us in the private group, Vishesh. All right, folks, let's get into the charts. And I'm going to start with currencies as always. And let's have a look at what the dollar did on Friday and during last week. And this is the dollar index. And you can see the dollar has actually ticked up after forming a double bottom here with a slightly lower low on the second attempt, which is kind of bullish, actually, kind of positive for the dollar index. And although I think gradually, and I could be wrong, this could be the bottom in the dollar, but I have an idea that we have to get a little bit lower down into the low 90s before moving higher. And that would take us to the bottom of this large megaphone and to where I've got this question mark and blob. But if we don't do that, we're going to move up from here and probably up into the middle of this range again at around mid 100s, 105, 108 maybe, or 100, somewhere around there. If we move up from here, we've got to get through this triple top, of course, which might take some doing. And it's also the Dixie Moab, the breakdown level. And all the moving averages are above us, starting with a 20 that we're kissing now, the 100 just above there, and the 50 and the 200 up here. And that's where we sold at the 200, and we're still short on oil. Still short on the dollar. I'm thinking of oil. Oil looks pretty similar, actually. The oil chart is not very different, but we're still short in mind on the dollar. So I've got a couple of positions in mind, one actually on, excuse me, I just need to get a juice here. I've been driving through we're at an incredibly high altitude here as well. So it's very, very dry, and there's no humidity in the air at all. And the sportsmen who come to this part of South Africa really struggle to play sport, especially rugby, which is a very physical sport. So the dollar index, just getting back to what I was saying, is that if we do move up slightly higher, that might push up, for example, the dollar yen and push down some of the majors. You can see they're already moving down. The euro, the pound, the Aussie, and the Japanese yen index hovering at support. So I'm basically not very interested in currencies at the moment until the dollar decides what it's going to do at this moving average cluster and resistance above it. If it moves down, we should see the dollar yen move down. I've been stuck in this trade since, as you can see, the 13th of November, and we're now into the next year, and I'm still short and still stuck. I think we've got a chance of this moving down from here, and we've also got a chance of intervention by the Bank of Japan, as always. The large red arrows on the left-hand side here are previous examples of either confirmed and definite intervention or suspected intervention by the Bank of Japan. Sometimes they don't just tell everyone, although I think the US always knows about it. So could we see something like that happening again? I think certainly we're above that first red arrow. We're sort of in between these two arrows where they intervened twice on previous occasions. So it is possible that we're in the zone already and that we could move sharply down from here. I think we might do. And if you look at some of the technicals, we've got an overturning RSI and stochastic and some technical patterns at the top here that looks like slightly toppish. These periscopes with a mini waterfalls after the periscope candles. So there, mini waterfall up, mini waterfall up, mini waterfall, and we're trying again. That's a double top. Will we get through it? I don't know. But if the dollar does move up, it could put pressure on other stuff. But if the dollar does keep on moving down, which I think is what is in the best interest of the markets and just generally, a dollar that's too strong isn't really good for anyone, particularly if interest rates remain high and countries, it's just very difficult to pay it back. High interest rates and an expensive dollar is not good for most countries and the US too. And so it's also not good for stocks and risk equity, risk assets. So we really want to see the dollar staying roughly under about 100. We're at 98.5 now. And if we can just stay under 100-ish, maybe 102, then I think we can see some of this getting going. I'd also like to buy the Australian dollar. We bought it once at the breakout from this big ascending triangle after that big sell-off, which was the tariff sell-off, and a beautiful tradable spike low going through the previous spike low, but recovering immediately. Very tradable and very bullish for the Aussie. But can we keep this going? I've got a target up here at about 0.69, but I think we can get into about 0.72 or 0.74 on the Aussie. But we're not in this trade any longer. I got in at the dip down to the 20, got out of the top 200 period Bollinger Band, and I think we may have to just dip down a little bit further. I don't know. I'd like to get long. Perhaps we'll try a little bit here and maybe down back at the confluence of the 50 and the 100 period moving average and the breakout level, which actually technically we haven't retested yet. So we broke out, came back a little bit, not all the way, rallied up to the top Bollinger Band, and we're back at the 20 period moving average here now. So could we get a move back down to the 50 and the 100 and the breakout level and touch it properly this time before moving up? Yeah, it's quite possible. So that's at about 0.65, and we're currently trading at 0.6, almost 0.67. So ideally, we'd get a 200 pip dip on the Aussie. I don't know if we're going to get it though. We may have to just nibble at this currently high level. All right, that's currencies. I'm going to move on to stocks now. If you've got any further questions on currencies, please do put them up, and I'll come back to them. Thank you very much. Thank you, HB. Appreciate it. Happy New Year, Ray and Adrias Canales from the EU. Wonderful. Always lovely to have people from the EU. And let's get back to the charts. So, right, now on stocks. This was Friday. I'm just going to sort of look at the Nasdaq. Well, let's just look at the Nasdaq and the S&P. I've got some some positions on some of the stock names too. We'll talk about silver for sure. Don't worry about that. It's a very important topic today. So here's the Nasdaq. So quite a good run up. This, as I said, last week was quite good. The Christmas week, or the New Year, between Christmas and New Year, it actually slumped down a bit, which is quite unusual. And normally you'd see just a gradual continuation. And we just dropped back down a bit, but only to the 38% fib, and only into, I've got 3 positions on here, only into my sort of middle position, which is right where we are now. So I've got a position slightly higher and one slightly lower and one more or less where we are now. We moved up to that level, not reaching the all-time high, whereas the S&P did, fell down, bounced out, and we've now retraced back to the 38%. The initial retracement was down to the 618 fib, the golden ratio, and the next retracement, after making a lower high, by the way, has been down to the 38%. So, a natural Fibonacci progression. And if we can hold this and gap up perhaps over the weekend or in the Asian session and London session tomorrow, perhaps we can see this getting going back up to the all-time high. I'm going to remain long on the Nasdaq, and I think in line with my comments and notes earlier, I think, and until proven otherwise, folks, and this is really important for me to emphasize this, until proven otherwise, I think that the S&P and the Nasdaq and perhaps even the German 30 and some of the other stock indices around the world are going to have a fantastic year in 2026. There are a lot of banks and hedge funds that agree with me, but there are also a lot that don't. A lot of, particularly the hedge fund guys, do not agree with this, and they think that we're due for a massive market correction in 2026. We'll see who's right. I hope it's me because I'm long, and they'll hope that they're right because they're probably short. So that's the way it is, and I think we're going to see interest rates coming down. I think JP is going to be forced to cut further if he's still around. He will be replaced in April, I think. And I think the new Fed chairman is more likely, will be more likely to cut rates because of the nature of the appointment. And I think we could see massive liquidity injections into 2026. And I think any blow off top or collapse in the market might have to be delayed until the end of 2026 or early 2027. So one more year, maybe. That's what I think. And therefore, I'm long on the NASDAQ, long on the S&P. And as I said earlier, it's a matter of two steps up, one step down. Currently, we might see these take off like we saw gold and silver doing. But at the moment, it's two steps up, one step down. Let's look at that idea on the NASDAQ. So, just in the last couple of months, a little bit up and then down, a little bit up and then down, not quite as far that time, and then a little bit up and then down, but not quite as far that time either, making higher lows, but also lower highs and forming this triangle. And so if we look at this as a triangle, perhaps this will help some traders. You might want to trade the breakout of the triangle rather than faffing around within the triangle. So let's try and draw this and something akin to this. Actually, it's pretty neat now that I look at it, although we've got a bit chopped up for the bottom there over here. So maybe we need to get a little bit lower down, something like that. So yeah, so we've got a bit of a triangle. You can neaten this up yourself. I'm not going to bother with it too much now because I won't be trading the breakout. I'm already long. But you can fit your perfect symmetrical triangle onto there and either buy the bottom of the triangle at the 100-period moving average and that previous low and the 618 fib, maybe a double dip there, a double bottom, buy the bottom of the triangle. Actually, it's not even, the way I've drawn the triangle is not accurate. It may be, actually, it might be perfect. Looks pretty good as it is. So you can buy the dip to the bottom of the triangle at the 100-period moving average, wait for the reversal and buy that and wait for it then to get out through the top, add some more size and ride this up as we go. And so this is the sort of thing that I would recommend. So that's where we're trading today, a dip down to, let's say, 24.8, which is where the 100-period and the 618 fib is and the double bottom that we had before. And then a bounce out of there, up through, we might not get through there, it might just carry on moving down, but a bounce out of there, up through that high, a break of that previous swing high and this one first, and then a return to the triangle, perhaps that previous lower swing high, and then up from there. Now, targets for this is my target for the S&P, for the NASDAQ. Let's just start with the top 200-period Bollinger Band. And we can then, draw the Fibonacci projections on here too, which I've already done. I've got a different chart set up for that. And they take us to around about 27.5 to 28,000 on the NASDAQ. And so, whether we'll get there or not, I don't know. It doesn't really matter. But I'm long, and all I want this to do is to get moving in my direction. And if we do get down to that level that I just pointed out to, I will have the opportunity to add some more size there if I need to, or if I want to. I don't know if I want to, but maybe I will. I will see how we go, how the rest of my positions are looking across all around the show. So that's the NASDAQ. The same will apply, exactly the same, to the S&P. I haven't got it all drawn on here because I haven't been trading the S&P as vigorously as you can see. We've got one small position there. It hardly moved down compared to the NASDAQ on Friday, just a hesitation doji, that's all. I don't know what the panic was all about. Moved down sharply, fair enough, but it bounced off the 50, back just even maybe fractionally above the 20 right now, and just a hesitation doji. It's not calamitous, it's not catastrophic. The NASDAQ looked a lot worse, admittedly, because it moved a lot further. Let's go have a look at the NASDAQ very quickly. So that looked a bit scary, but it also bounced up at the end of the day quite vigorously. And we only got down to 38% fib. So it looked bad because we had rallied all the way up towards the top of the triangle and then collapsed down towards the end of the day. And at the same time, we saw Bitcoin, Ethereum, XRP, and Solana, and many of the altcoins just bursting into life. At the same time that gold, silver, and the NASDAQ and the S&P collapsed late on Friday. Maybe just a coincidence, I don't know, but it's certainly interesting. So I'm also long on the S&P. You notice I've only got one very small position here at about 6.8. I think the target, not my target, my target's about 7.8 to 8.2, something like that. But JP Morgan, I think it's JP Morgan, has a target of 10,000 for the S&P. And that's about a a 40% more, no, about an 80% rally from here. Yeah, so crazy, nuts, cray, as they say. Now, German 40, I'll look to get long probably fairly soon, probably tomorrow or late tonight, as we want to break out through the top of the zone. We've tried many times. We've got a beautiful pattern here. And we've just got to hold above that black line at the top for me to get long. We have not done so yet, although we did try on 2 occasions, but it only lasted 1 or 2 days on each time. If we can hold above that black line for 2 days, it looks like we might actually even have at least one of them so far. Maybe that one's just fractionally above, but a little bit better than that, a bit more convincing. Above there, I'll get long on the German 30. I'm not trading the Nikkei or any of the other indices. I'm also long on MSTR. That had great bounce, and Coinbase had a great bounce. And this also lends credence to the fact, or the idea rather, that cryptos, excuse me, let me get a drink, that cryptos might be on their way up, at least for the short term. And I think there's a big danger above us at about 100,000 on Bitcoin, which I'll talk about when we get to that chart. But for now, I think we can get to 100,000 or 98 maybe. But after that, it's going to be problematic. But we have seen MSTR and Coinbase bouncing out of their very key support levels and holding that black line at the bottom there on MSTR. You can see my long positions. One was taken early in December and one late in December, and we're holding that level fairly well. And actually, there was quite a decent bullish move on Friday. Same on Coinbase, although Tesla and NVIDIA, the other ones I'm long, Tesla moved down quite sharply. I'm long on Tesla as well. But this one, Coinbase, moved up beautifully on Friday. And this all happened when the Nasdaq, the S&P, gold, and silver were collapsing. Coinbase moved up, MSTR moved up, Bitcoin, Solana, Ethereum, XRP all moved up, and many of the altcoins, as I said. So I'm long on NVIDIA. I'll show you my position very quickly, just down there at the dip, down to that double bottom, got long, still long. Might add some more onto that next week. Coinbase, I'm long. I might need to add some more onto there. I think we're slightly out of the money on that one. Tesla, interesting one. MSTR, I'm long, but I might add some more to that one too. And then Tesla, interesting. Everyone's so negative about Tesla. It dropped off by, we dropped from on Friday, $460-ish to 400 and we got as low as 435. So yeah, $25 drop, quite big. That's like 5%. But look at the bigger picture. I've been long on Tesla. I'm a Tesla bull, been long on Tesla for a long time, constantly long on Tesla, sometimes short, but constantly long. And my last positions are these green arrows. And yeah, so we're long on Tesla. Hopefully this will hold. We've broken down through the 50-day moving average, which isn't great, and we're well below the 20 now. And so I guess we may have to revisit this double bottom or it is a double bottom as it stands, a very short-term one, but to revisit that. There's a couple of gaps. There's actually a little gap down there too, at about $340, and that might even need to be filled, and that would take us closer or even below the 200-period moving average. So keep an eye on Tesla. It might be a bit shaky, but I do like the way Coinbase, NVIDIA, and MSTR behaved on Friday. Right, let's go across to Bitcoin. I'm not going to spend a lot of time on this, just to say that I'm going to give you a couple of things. I'm not going to talk about all the other ones. I'm going to leave it to Crypto Paul. Crypto Paul, our team member here, will be talking about crypto all of next week. I'm sure he's pretty excited, but cautiously so. And I'll tell you why. Because I'm long across the board on all of these things that you got on the page here. I'm not going to go into all of them, but I will talk about Bitcoin. And Bitcoin, I wanted to say two things. We're still within this potential bear rectangle, the orange block, but we are holding a long-term, very long-term trend line. I don't have it drawn on here. Weekly trend line. Maybe I can draw that on. Let's quickly look. No, it's not that chart. I can't remember now. Maybe, yeah, it is a weekly trend line. It's the weekly 100-period moving average. We've tried it once, twice, 3 times, 4 times, 5 times last week and held every time. We've also been holding what looks like a bear flag, but we've still got to the top, got to get to the top before we decide whether it's a bear flag or not. And it's also where the 20 and the 50-period moving averages here on the weekly chart. Let's go back to the day chart. And I'm going to point out a couple of things. I'm long, but I'm going to be very cautious when we get to this dotted line, which is the center line of this potential bear flag. That's these upward angled lines. And it's also the top of this potential bear rectangle at the same sort of level. And I'll draw a blob in there for you. That's going to be danger area number 1. Let's do an ellipse. Danger area number 1 for a possible rejection. And I'm going to leave it in red because it's meant to be danger. And then danger area number 2, it's closer to 100,000. And I'm going to show you why. And let's just clone that and put that somewhere near 100,000, which is around about here. And you can see that's also the top of this potential bear flag. Let's move it along a little bit further along. So there it is there, around about 100,000, give or take 2,000 or 3,000. So 98, 97, up to about 102, 103. That's another area of big concern. It's also where the 200-day moving average is, and the 100-day is now below us. If we look at that on the weekly chart, and I'm going to look at a different type of weekly chart with you in a minute, but if we look at this on the weekly chart, and I hope that that we're not breaking up and that the internet's holding well. If you look at this on the weekly chart, there is the top blob that these are the blobs that I just drew in. There's the first one. There's the second one. Notice that on the weekly chart, it's also where the 20 and the 50 period moving averages are in alignment with the top of that flag, etc. Back to the day chart. So those are the two areas that I'll be very cautious of, and perhaps even potentially hedge my long positions and hesitate, lock in the profits, and wait to see what happens next. It doesn't mean I'm getting out of the longs. It doesn't mean I don't trust the longs. It doesn't mean that I think I'm going short. It just means that these are two danger areas where I will lock in or protect my profits in one way or another, probably by hedging. How much, I don't know. The size of the hedge, what percentage of the long position, I don't know. That's the first chart I wanted to show you. The second one is this weekly chart. Thank you, Paul, Crypto Paul, for your reminder to me of the great use of these charts. Now, this is a, let me just check. Yeah, so making sure I got that right. This is the Heiken Ashi chart and I'm not going to explain to you how Heiken Ashi works, but it basically smooths out the price action and yet presents it to you in candle form nevertheless. And it's got to do with averages of highs and lows, etc., etc. Now, when the candle, this is a weekly chart, when the candle's green, we're moving up. When it's red, we're moving down. You can see this is a very good way to determine tops and bottoms for Bitcoin swings, for Bitcoin seasons, for Bitcoin cycles. You can use the weekly Heiken Ashi to time your entries and exits pretty well. Now, I'm going to go back to 2022 and point out what happened on the previous occasion when we had a big move down. Which one are we looking at now? A big move down like this. And look at the pattern here in the center of your chart. I want to highlight this to you so that you can recognize it next time you see it. And it's this pattern over here, all right, where we get the candlestick wicks getting smaller and smaller and smaller, the candles getting smaller and smaller, weekly candles, and then we get a green one, which signals the reversal. Then we had 1, 2, 3, 4 weeks up, and then we turned back down and started moving down. We tried a little bit there, and then we got going eventually. Keep that pattern in mind as we scoot along to where we are today. Now, this is the same chart, the same type of chart, and that's where we are today. An almost identical pattern above the 100-period moving average. And if we took that move in 2022 and copied that fractal, that's all I did was just copied that and stuck it on the end here. And this is what happened in 2022 after the same pattern completed. We moved up a little bit towards the 100 and 200, 150 and 20 period moving averages. And that level at about 90, you can see on this chart, it's about 97. And then we moved down before making the real bottom. Very interesting that that fractal pattern example takes us down to 63,000 on Bitcoin, right into the center of this breakout range that took us into this new into the cycle's rally, into this last part of the bull run. So it takes us back into the consolidation zone to kiss it goodbye. We have not done that yet. And, I always say this to everyone, you've got to assume, you have to, on every occasion, when we get a breakout, it's got to be revisited before the rest of the move continues in earnestness. And we have not retested the breakout point. We've only barely retested this breakout level, but we certainly haven't done the main bit. And if we follow the same fractal as 2022, this one here, which I've simply copied, literally copied and pasted and stuck it on the end here, you can imagine we can go up to about 97, and I said 98, maybe 100 in our case, in our example, and then I'm going to be protecting my position, hedging, worrying about it, and considering that we may have to do something very similar to 2022, not only because we've got a fractal, but also because we've not yet said goodbye to the original very, very significant and important breakout level in the 50s to 70, high 50s. Well, we start at the bottom here at about 50 up to about 70. So between 50 and 70, the center of that is about 60, and that's where this fractal takes us down to. In fact, takes us down to 63 if we followed something similar. It won't be identical, and it won't be, it may not even do anything at all like that. It's never going to be identical, but it might do something similar. Now let's go back to the proper Bitcoin chart. And with that all in mind, I'm going to finish with this on Bitcoin, move on to energies and so on. That level there, and it coincides with my first blob, and it coincides with the top of that orange horizontal bearish rectangle. And that's also where the fractal in 2022 took us to before it reversed and collapsed much further down. That's all I'm going to say on cryptos. The rest will follow suit. And I won't talk about altcoins either, because Paul will talk about that. Now, gold and silver, just to state my positions to start off with, I'm short on gold, long on silver. Short gold, long silver. We've been short gold, long silver. I think this is occasion number 17, and maybe this will work out as well. The reason I've been sort of going in opposite directions on these two metals at these extreme levels is because I don't trust moves in either direction. I don't know if we can keep moving up higher on gold and silver, probably, but I'm not convinced. I don't know. I think silver probably has a better chance of getting up to about 90 something or 100. We actually got to 80 and some change. But could we move on higher? I don't know. Probably, but I'm not sure. Will gold and silver do the same thing? Probably, but I'm not sure. Can gold, after making a new all-time high and reaching up into the 1.618, not quite, almost getting there, we may have to still get there. That's at 4,500, 4,580. Then you got to 4,550, but it's pretty damn close. Maybe that's it. We moved down very sharply. We're short. We got short on the breakdown. We have previous short positions, and those short positions over there went out of the money, of course, as we rallied up. We did hedge it, but at the same time, I had longs on silver, which enabled us to cover the risk on the drawdown, the floating loss. There wasn't a large one, but it was a floating loss on gold. And so we've been long on silver. We got long there, and we're long again now. I don't know if silver can carry on going up, but if it doesn't, I'm short on gold. And if gold doesn't move down and moves up, it doesn't matter because I'm long on silver. So I'm kind of hedging, literally hedging my bets. And it's the way to do it when you're not sure. And silver has a blob just above it too, which is where I thought it could reach. And we just about touched it, but we could still get higher up into the next fib level, and that's at 91.60 on silver. And if it really wants to keep going, and it certainly looks like it's going parabolic or exponential, if it really wants to go further and test the $100 level, we've got another fib extension at $101.20. So my contention is that silver has probably a better chance of reaching up into these levels than gold has moving higher. I think this is a better bet than gold longs. I think this might get to 90 or 100, but it might not. But if it doesn't, I'm short on gold. So that's the way I'm playing it. You might think it's really weird and really strange, but it protects my risk, protects my capital, protects the downside, and everything like that. Now, how far could we get down on gold? I'm not going to even project where these could go up to, because I don't know. But I do know where we could get down to if we move down. And I've had this red trend line on gold here forever and a day. And I think we've got to get down there at some point. And that would be right now if we move down over the next number of days and down to that previous consolidation and support level, all around 3,900 to 4,000. 4,000 is a big round. And if this really does get weak, which I don't think there's any reason to believe that it will, but if it does, we may have to get back down to the breakout triangle. And as I said to you on Bitcoin, Bitcoin has not retested its breakout, and nor has gold. And Bitcoin and gold don't look dissimilar in that sense, that Bitcoin could come back all the way down to its breakout point, and so could gold. So I remained long on silver and short on gold, and we're trading this day by day within the private group, and our positions may change day to day, 4-hour candle to 4-hour candle. And if you're in the private group, you know that we're on these trades and we're watching them like a hawk and very actively trading them. So these are not fixed ideas, not fixed positions, not fixed directions. Copper, I'm short on copper from that red arrow. I think copper, if anything, has got a chance really overblown. We reached a double top there, moved down incredibly sharply. We got short at the potential double top, blind really on speculation. So we got to there, I shorted it. Very expensive, copper at the moment, just under $6. In the greater scheme of things, it's not that bad, but it's not incredible. It could go a lot higher. It could go to $10, $20, $30. And there's certainly demand for copper. But if industrial demand drops off and the economy starts to look frail, copper will tell us straight away. We'll know immediately, because copper will probably move down first. Now, let's look at natural gas and oil. Is everyone still with me? Are you all still following? Let's take a wee break and look at some of the questions. Happy New Year, Mark. Good day from Raleigh, California. California. Yeah. 53. 60. Well done. You don't get Daniel, you can't say 60 after I've cancelled the free giveaways. Happy New Year, Mark. Vishesh, yeah, you're getting back on the trading horse. That's fantastic. Just making sure. Uranium, we'll get to uranium. Uranium. Yeah, uranium. We'll talk about that shortly. Good day, Andres. Ray, we said hello to you already. Sam, we've talked about silver just now, Sam, so I hope that helps you. Nasdaq and M pattern. We talked about Nasdaq. M pattern, perhaps yes. Who was that? Timberwolf. Alberta, Canada. Wonderful. So many wonderful places you folks live in. WTI natural gas. Let's have a look at that. We're going to go straight onto that. Good day, Martin. And lots of folks here. I'm surprised that anyone's here at all, actually, on a Sunday night. I suppose the market's opening tomorrow. We've got to get going. Good day, Emily, again. Hello. Hello, Keith. And so many questions and comments. I'll come back to them, folks. I don't want to disrupt the flow of tech here, so let's go onto natural gas and oil. We'll come back to those questions. All right, so natural gas at the Henry Hub, the futures, front month futures. Let's look at the big picture. So we've got this chart, which you may have seen many times on X, and if you haven't seen this on X, please go and follow me on X and follow Paul, Crypto Paul, and myself on X. Our X channel is called ArcisFX. So go across there and sign up. Just follow us on that channel. And this chart has been posted out several times. So we have this rollover gap, the previous contract, previous to this last roll. We have a weekend gap above us, if you remember. We've talked about this many times. That gap has not yet been filled. I think we may have to fill it. We had a rollover gap, which gapped down. The last roll gap, quite a significant gap down, all the way from 438 down to 390. Massive move down, big gap down. We moved down further, and I got long over, I can't remember now. Doesn't really matter. We've only got one position on now. We got long and then hedged and then short and then unhedged. Made a small profit on the way down with these moves. Nothing major, nothing really to get excited about at all. But we're now long right from the bottom. Why did I get long here? Well, first of all, I wanted to get long at 375. We did get long at 375. And that's exactly what happened. 375 is a very key level on the natural gas charts in the long term. And if you have been, I'm going to go to the day chart. If you've been following me at all over the last few years on natural gas trading, you'll know why 375 is key and important. That's the purple line in the middle of the chart. If you haven't been following and you don't understand why 375 is key, perhaps go look at some of the previous videos I've done on natural gas. I don't want to have to go through all that now. And we've got little time left because we spent too much time on other stuff. Should have been talking about natural gas. So here we are. This is the day chart. 375 was key. We got long there. Let's go back to the 4-hour chart. We got long at 375, and I hope that was the bottom. To get back into the rollover gap, to fill it up, get up through the 200 and the 100 and all these other ones, and move up towards that weekend roll gap, which hasn't been filled. That would take us above $5 to about 509 at the bottom of that weekend gap, and 533 big weekend gap at the top of that weekend gap. So it's about a 27-cent gap. I think it's got to be filled. We could go higher. Look at the big picture. We've got this long-term channel that I spoke about many times. I'm just going to digress a little bit here. And the internet seems to have gone super slow for some reason. I don't know why I can't get these charts loading. Doesn't matter. I'll come back to that thought in a minute. But here we are. We broke. So I bought there. This is exactly what happened. You can see I've got a black arrow over here, and that's where we exited the long position. We bought at 375 and took the trade off at break even. And then I was traveling. This was on Friday or Thursday night. I can't remember. Then I was traveling. And on Friday, while I was traveling, it moved down to the next support level where I had that line drawn in at 355. If you watched last week's live stream and my natural gas videos during the week last week, you'll have noticed that I had my eye on the 355 level for some time. Not only is it a triple top breakout level, it's also closer to the bottom of the rollover gap, and a better place to buy. It's actually the best breakout level for this fresh contract that we've now completed, this contract here that moved up and then collapsed back down to where it began. So we gapped up on the new contract through that 355 level, through the triple top, moved up, and then collapsed back down again towards the end of the contract. Not quite back to 355 initially, only to 375 or 373, whatever, only to that level. And I said to everyone, and I can't remember when I did the last natural gas video during the week, but I said to everyone, it's very likely that we're going to have to get to 355 because it's where we broke out from. Once again, the same principle, breakout, pullback. We saw it on Bitcoin, and we also saw it on stocks. And so we've seen it here now. I was going to say we'll probably see it here. We have seen it here. We came down back to the triple top breakout to fill the roll gap and bounced out of there somewhat. So that's where we got long. And this was on Friday. I didn't quite get the bottom because I was in the car somewhere in the middle of nowhere, and I had no internet reception for about 2 hours, about an hour and a half, which is a bit panicky for me, even though it was the weekend. I have Bitcoin trades on. And so as soon as I could, we got long, a little bit higher, about 360. We did get down to 353 or 356, and we're still long. We had a nice reversal. This is a 4-hour chart. Nice reversal, the penultimate candle on Friday, and then we held it pretty well with the ultimate candle on Friday, making a little, just holding the level. I think we're going to hold this level and probably gap up, and I think we're going to gap up on oil too. And I think we'll see, not because there's any reason for natural gas to gap up, probably not oil either, but because of the Venezuela situation, I think there's just going to be gaps up, whether it's logical or not, but particularly on oil. That might be more logical. But for here, it might just go along with it, and we might just be in a situation where people are nervous about things in general, and that the price might just go up. It happens weirdly in markets like that sometimes. So maybe we'll gap up, and ideally we'll gap up above 375, the very key level on this chart. I wouldn't be surprised if we gap right over it. We've done it a few times recently. We gapped straight through 375. There it is there. In fact, it was a rollover gap. If you remember this, there's the purple line, 375. This candle here, the white candle that you see in the center, isn't a candle. That's the way FXM treats gaps. They just put a candle in for some reason, but it's a gap. And so that gap went straight up over the 375 level, this purple line here. Look where we are today. we're back in exactly the same situation. We're below 375. It's above us. We've got some political and energy market news, which might cause some chaos. And maybe we'll do exactly the same, gap up over the 375 level. Where did we gap to last time? Remember, last time was a rollover, contract gap, but we gapped up to 392. So if we gapped up to 392 on this occasion, I'm not saying we will, and it's unlikely, but that would take us up to the 50-day moving average, 50 period on the 4-hour chart. That's the red line over here. So I think there's a chance we could gap up to 382 or 390, something like that, in a few hours' time. And if that happens, that will set us up for the next contract to behave in identical fashion to the previous contract, this one here that we've just completed. Maybe not identical, as I said, nothing is identical, nothing repeats perfectly. So that's natural gas. I'm long, I've got long at the bottom, and I will add if we gap up and then retreat to fill that gap, come back a little bit into the gap, maybe the top of the gap or the bottom of the gap. I'll add some more natural gas because I don't have a big enough position size on at the moment. And I'll try and add some more, but only if we gap up. If we gap down, I think it's unlikely, but if we gap down, I'll probably wait for the gap to fill on the bounce, see what happens on the retrace back into the gap. And if we carry on moving higher through the gap, if we gap down and move up, complete the gap and move higher, I'll add some more long sides. If we gap down and keep moving down immediately, I'll have to hedge the position. Fortunately, it's only a very small position, about 20%, which is not actually that small. I normally only trade relatively small positions on natural gas relative to other instruments because we can get 5 or 10% moves in a single day and you don't need to have massive size. Now let's look at oil. With what went on over the weekend in Venezuela, quite startling, quite unprecedented, and setting probably a very poor and bad precedent overall. Maybe very good for Venezuela, probably. I'll grant that. Very good for the people. I've seen loads of interviews by Venezuelans, and I don't want to give any secrets away, but there are people amongst us that are in our community here at ArcisFX who are intimately involved with what's going on in Venezuela. So, and from what I glean, and I may change my opinion over time, it's pretty good, really, really good for the people of Venezuela. However, there might be short-term chaos and confusion and further conflict. There may be other gangs and movements that are trying to immediately step in, probably. And so I think because of all the uncertainty and the weirdness, there's going to be a gap up on oil. But I think, and I've already got the green line drawn in actually, prior to any of this stuff going on, and I anticipated that this might be what we could expect before moving down. Now, we did get short at the 50-period moving average here, prematurely perhaps. I didn't even wait for the trend line or the 100 or the 200. I got short at the 50. And I'm guessing, and I don't have sight of it, but I will do straight after this session. I'm guessing that we maybe have a projection or a price already on a gap up. If you've got some gen on that, put it up in the chat right now. If you know if we have already gapped or if anyone has a price. But if we gap up on oil, I think it's going to be an opportunity to sell. I don't think the US has done this with the idea of increasing oil prices. I don't think Trump went, let's do this to Venezuela because we want the price of oil to go up. Quite the opposite. And so I think we're going to be selling into rallies if we get them. And it is also possible that we could just gap down. There could be more oil in the next year or two, a lot more oil flooding into the market, driving the price down. And markets, because they're in anticipatory, it doesn't have to happen today. It could be something that is likely or certain to happen in 6 months' time, whatever it is, that the markets will price in today. And when we get there, it's already priced in. And so if there is an expectation that oil will flood the markets, I don't think that's going to be the case, but will flood the markets because of what's happened in Venezuela, we could see a gap down. I don't know. Tell us in the chat if you've got any gen on that. So, considering all of that, yes, I agree with you, Damajan. I think there are arguments on both sides, and I think there was a deal done with the Taiwan thing, it's all just nasty stuff. I agree with you. Anyway, let's get back to this chart. So what is oil going to do? I don't know. If it gaps down, I'm already short and we'll be happy. If it gaps up, I'll get more short, and ideally at the 200 period moving average and that double top over there, potential double top. Let's draw a horizontal line across over here. So there's a top there, and it's actually where the 200 period moving average is today. That moving average is going to move down, but that top will not. And it's a very, very important level, that black line that I've just drawn in. It's actually slightly below the key level there. And that's at about $61.60 or 50. Call it 61.50. And I think that's a good zone to, and the 200 will move down there if we just project that. The 200 by the next couple of days will have moved down to that level too. And so 61.50. If we're going to move up there, I'll try and sell more oil. If we move down, I'll try and sell more oil as well. So no matter what happens, I'm going to still remain short on WTI oil, unless it just goes up through that 200 period moving average and it goes to $100. I don't think it's going to do that. I think it's going to be the opposite. Let me hear your thoughts. And then there's a comment about uranium, and yeah, uranium could be a good year. I've been long since $21. We're trading at 46 now, and I've just added recently. We got out, we took some profit. I think near the sort of not quite the top. I think in the yellow band, we took, yeah, that's where we took profit, in the yellow band somewhere. It moved quite a lot higher. It's come back down, and I got long again at the point of control. We fell through it though, and bounced back into it, fell through it again, bounced back up towards it, and on Friday we're getting back in there on that candle, back into the 20, 100, and 50 period moving averages, and back in, trying to get back into that zone. So pretty good. And I think that's good. We've just got long positions on there. Long. We're just long. Long on lithium too. But long on lithium at 59. We're trading at 66 now, so that's excellent. And I think lithium, by the way, let's see where uranium could go. Let me just, I do this every month or so just to startle everyone and make them super excited about uranium. Let's look at the long-term weekly chart. If my charts will load. There we go. Long-term weekly chart on URA. This is URA. It's the Global X Uranium ETF. And we've been up as high as 133. We're currently trading at 46. U-shaped bottom. Lots of action and activity over here, which is driving us higher. This volatility is excellent. It indicates that there's some life in this market and that people are now interested in uranium after, how long has it been? 2020, and since 2011. So 9 or 10 years, all uranium did was lose value until 2020. And we've had this volatile, not basing period, the basing period was here, but this volatile begin to the next run. And are we going to stop at 134 at this previous high, weekly high? I doubt it. I think we could go a lot higher on URA if the world begins to adopt more nuclear energy, which I think they should, and I think they will. Okay, and that's that, folks. And then just to quickly talk about, I did mention Bitcoin dominance, and again, I'm not going to talk about this too much, but Bitcoin dominance, for those of you who trade altcoins, will be looking for this to move down. I think this looks fantastic. That spike high and that spike high through the 200, that one didn't get through that one got through the 200. Those two got to the 200, that one got to the 200, that one didn't, and this one has not at all. In fact, we're failing below all the other shorter term moving averages. Bitcoin dominance indicating pretty good news for crypto overall, particularly the altcoins. And then Bitcoin gold is another good one I've been watching for a while, and that's holding its level with a very beautiful, perfect, actually, reversal candle here, double bottom, tweezer bottom with shaven bottoms at the same time. Not only a tweezer bottom, not only a shaven bottom, not only a bullish engulfing candle and potentially a piercing pattern, but also a move back up above fractionally, but above the 200 period moving average here on the week chart on Bitcoin gold. So very good news for Bitcoin overall. But just please bear in mind the cautions that I mentioned earlier when we were talking about Bitcoin, and that we've got this pattern that's happened before in 2022. And if it follows the same pattern, we're not out of the woods yet. We haven't kissed the departure point goodbye. We haven't even reached the interim departure point. and we may have to do so. If Bitcoin is particularly bullish and we're going to go with higher highs and higher lows into the future on this very long-term weekly chart, then this bottom should hold, because we now have a higher, we've got higher lows. There's the first low, second one, third one, all higher than the previous one, and higher highs in what it looks like now, a particularly normal, parallel, bullish sort of channel. Let's try and have a quick look. Something like that. So if that is the case, and we do hold here, and we don't follow the previous fractal in 2022, we do get above the channel center line, this new channel that I've just drawn in, and these moving averages, then the next target should be to the top of the channel on Bitcoin. And if we move straight up there at the same angle, let me quickly put a path in. If we move up roughly at the sort of angle that this chart's moving in overall, we could get to 180,000 on Bitcoin by April next year. This year, 2026. April 2026, we could be at 180, or by the same time, at the same time, April 2026, this year, we could be down at 63 or 60 or even fractionally lower. And that would take us a little bit down from where we are. Let's draw that in just to be complete, something like that. All right. So I think at this stage, we have to conclude that the red path is the most likely one and that the green path is the least likely one. But it all depends on the way we hold this level here and what happens on this daily chart at the blobs that I drew in basically earlier when we started the session. So there we go. First point of resistance and concern, second point, and if either of those fail and we move down to the bottom of this bear flag, we will probably follow that path down to 63 that I spoke about and follow the 2022 fractal, which is now 4 years ago, and the length of a Bitcoin cycle. And that's it, folks. I'm going to get to some of the questions. We've done exactly 1 hour, so it's perfect. Right, what about natural gas? What about it, Ruchu? I think we've covered natural gas with some detail. It's a pleasure, Darius, or Darius, depending on how you pronounce it. I don't see any effect in natural gas from Venezuela. Probably not, as you say. Pleasure, Emily Trading. No problem at all. Natural gas, not WTI. Yeah, we don't, sometimes these things just go along. I'm not saying that there's any influence on natural gas at all. I'm not saying there will be or that there won't be. Sometimes things just get caught up in the emotion of the things, and natural gas could go along with oil, or it could do exactly the opposite. I just don't know. We'll find out in a few hours' time. In fact, in exactly 5 hours' time. But yeah, I think oil may react upwards. Bearish about the weather. Fantastic, Matt. We want bearish weather, don't we? For sure. Oh, you bearish weather. Ah, okay. Hedgehog. Yeah, that's just my nickname. It was given to me in the group. All right, let's see if there are any further questions up above, and then we're going to finish. Folks, we're basically done. So if you want to say goodbye, make sure to like and subscribe on the way out. And if you've got any further questions, type them up. But otherwise, I'll see you in sessions and in videos next week. And make sure to tune in every day. There's a video every single day and a live stream on Wednesday too. But there's a video every single day next week. So make sure to subscribe so you don't miss them. And press the notification bell. There are rumors that Russia had flown out 800 tons of silver out of Venezuela. Yeah, probably. I wouldn't be surprised. 800 tons. It's not all that much money, is it? Natural gas going to hit? Is natural gas going to hit $7? I don't know, Richie. Is it going to hit $1? I don't know that either. From the standpoint of international, it's a step towards barbarism. We talked about that. Yeah, sure. I don't like it at all. Don't like any fighting, actually. I don't like war. I hate it. 66. Thanks, Ale. I'm 60, precisely 60. In 2 days. Grains. Okay, thank you, Barbara. Let's talk about grains. Let's get over there. Softs and grains, where are they? All right, I've got to get them up. Why are they missing? That's why I didn't cover them, Barbara, because they're not here. What happened? Commodities. Do we want that one? Okay, where's my commodities chart? It could be this one. Well, commodities on Bitcoin. Let's try this one. Ah, there we go. I don't know the Bitcoin chart on the commodities page. What was there before? That was sugar. Someone's been messing with my charts. Now I've lost the ticker too. Damn. All right, Oanda. Let's use the Oanda ticker for sugar. Okay, so Barbara, what is it that you wanted to ask about? I'll run through them very quickly. If you've got any specific questions, just put them up. Let me spend a minute here. Sugar, I'm long. It dropped down. I think sugar price is going to go up fairly shortly. And I've got the wrong chart now, so I can't really show you. But I've got all sorts of channels and lines. Maybe it's the Pepperstone chart that I'm looking for. Yeah, there we go. So this is sugar. There we go. Thank you. Thank you, Pepperstone, for saving me. I'm long from the green arrows on sugar. So we've got one long there, way out of the money. Well, not that bad, actually. $15.20, we're at $14.28. $15.29, we're at $14.29. And we also got one from $13.59. So 15, 14, 13. We're right in the middle, right, between our two longs now. We've broken out of the skinny channel, a bit of a falling wedge. And it's just very cheap. Commodities are, when they're cheap, you should buy them. When they're expensive, you should sell them in general, unless there's some extraneous circumstances which are likely to drive them nuts one way or the other. But we've got good support down here. I haven't drawn the line right across. It's the 78.6% fib. So the last chance Fibonacci. If we don't hold here, we're probably going all the way down to the bottom at sorry, did I say $8? 8 cents per pound. Currently at 14. We don't want that to happen. We'll have to hedge that if that happens. But I think we'll try and hold the 786 fib and the channel and allow for just a little dribble back down to the breakout point yet again, like all these other things, talking about the breakout pullback. I've got nothing on cocoa or coffee, really, just sort of not much. But and not much to talk about. But I'd like to get short on cocoa on a bit of a rally. I'm not sure if we're going to move up from here. We've got a kind of a double top here, moving down. It should move down low over time. And I've got a black line drawing my sort of estimated path. It should be more like that, something like that. This is where it should be, down at 4,000. We're still at about double that, 6,000. And maybe we've got a little inverse head and shoulders here forming, and then we could get higher. The target for this head and shoulders, if it is one, we could actually get long here on cocoa. Wouldn't be a bad idea, and might be something we look at on Monday. But a little inverse head and shoulders, and that technically would take us up. Let's just quickly figure it out. Would take us up from 4,950. Let's use that side there. Yeah, so that's probably about right up to that sort of fib level there, about 8,000. So something like that. And then also notice that where this orange band is on cocoa, we've got a little gap. And that gap probably needs to be filled. So I'd say we'd probably get up to 7,200 at least, and probably slightly higher, up to about 7,900 or 8,000. We'll look at this very closely, and when we get an opportunity to short it, we'll do so. But I don't want to do so at this point. And I think this little potential inverse head and shoulders, after a very dramatic sell-off and a breakdown through this double bottom, and we gapped down through the double bottom, even worse. So not only is it double bottom, but we gapped through it. So we probably got to get back there, right? And at least fill the gap. And filling the gap would take us to 7.2. But I think we probably have to get back up to the next ledge, which is like 8,000, 8.2. But play this candle by candle. Don't just willy-nilly buy or sell. Look for very clear reversal patterns on cocoa. Same sort of thing on coffee. Similar, but not quite the same. But I'm looking for a path here. I'd like to get short, but we may have to bounce. And as one bean is bouncing, the other one might bounce too. They grow in similar conditions, and similar things affect them. Not quite the same markets and not the same volumes, but there are some similarities. And so can we hold the bottom of this channel and bounce up towards the top of the channel on coffee at these very high prices when it should be cheaper? And it's not cheaper. But are we going to faff around in this big block at the top here forever and a day and eventually move down, as you can see my green arrow? Or are we going to move up first and then down? Something like that. Actually, we can draw this quite neatly now with this arrow. So something like that, perhaps. Let's make them meet up at the same point, just for fun. So that one goes there, and this one goes there. I don't know which path it's going to follow, but we'll play this candle by candle. At some point, I want to get short, and I want this to move down into more sensible levels. Let's make that one red. So down into these points of control at the bottom here. No trades really at the moment, nothing of particular interest, but those are my thoughts. Soybeans, we have no positions on soya. I'd like to get long. I've just drove through a soya farm today, and I was speaking to the farmer, and they were saying soya prices have been so low and so difficult to farm. Even, it's not that low, it's not that cheap, but even at this level, it's too cheap for farmers to really make a profit. So I think soya in general is probably I think just there's a general bid under soya overall, but it's looking a bit weak. We've got a gap there, which has now been filled. We came back to fill the gap, but we bounced out of the gap fill above the breakout point there, triple top. We didn't hold it though, and we're now collapsed. So that triple top is now firmly in place. So I assume on soya, we're going to go back down to the bottom of the range after what could be a false start through the top of the range here. We'll also watch the center line of the range, and that's at about 1,000. It's a big round. 1,020 is a good level on soya. So we're at 1,040 now. So let's start looking for opportunities to buy soya and short cocoa and coffee. Perhaps buy to start with. We might actually get long on these initially. And then wheat. I'm long on wheat. This is another grain that I still like. We bought at the triple bottom. We got out at the gray arrow there at the top of the range, and I rebought on the dip to the trend line. We actually got this one on the breakout pullback. This is one example where it's already happened, and we got the trade. So there's the trend line or the wedge. There's the breakout, and of course, we try to hold the black line in the center here, but the draw of the breakout is always there, and we came back down to the breakout and bounced out of it vigorously. We got long at the unseen, once again, strategically at the breakout, bounced up, came back down, and we're retesting the trend line. And on this occasion, another little reversal candle over there. There is a chance, of course, that as this is a falling wedge, that wheat might have to go slightly lower. And you can see I've got this line at the bottom here, the bottom wedge line into the apex of the wedge. If this was a false start, it might mean that we've got to actually get into the apex of the wedge and follow this path, something like this. Let me redraw that and move it along to the right-hand side. So that's another possibility that that was a false start and we have to get back deeper, or we'll hold this breakout where we started off here and on the second return and bounce out of there. And then cotton and corn. Yeah, I'm long on cotton and corn and just moving up gradually. Not very exciting. I think cotton's interesting. Corn's also interesting, but cotton, I like this very much. This is a very beautiful double bottom tariff sell-off, spiky spikes, perfect double bottom with the double bottom, second one being lower, the second spike being lower than the first one, holding the green lines, a brief dip down below, another little double bottom bouncing out. We've got one position long on cotton, and I think we could get quite a good rally on this one, all the way up into mid 70s and even 80s. So that's cotton. And I think that's it, folks. We've gone on way too long, and I've got things to attend to tonight. So I do appreciate you being here, and thank you for everything. Thank you for being here. Make sure to sign up, subscribe, and press the notification bell. That's all I'm asking you. I'm not even going to tell you about the private group or the membership on this channel that you can join for $1 or $2 to make sure you get all the private member videos on the channel. Not even going to tell you about that, or that you can join the private group pretty cheap too, and get every single trade that I take personally with real money I put up in the private group. And Crypto Paul puts every single crypto strategy that he plays up in the private group without fail. So if you want to be part of that, check out the links below. Have a wonderful Sunday, folks. Good luck for 2026. It's a new year. If you got beaten up last year, perhaps in crypto or other things, I don't know. But if you got beaten up and you insist on carry on trading, make this one a good one. Protect your capital, manage your risk properly, and listen to the Whipsaw song a few times before you start trading. Take care. Speak to you soon.